Greetings. Today is Monday, June 23rd, and at the moment the United States stock market is trading higher, and it seems to be shrugging off any concerns of the United States being drawn further into the Israel-Iran war. However, we do see some weakening signs in the stock market, like maybe the bull is losing some strength. So let me show you some of the concerns. The first one that I have is this nice rounded top that we're seeing on some of these leading indexes. This is MGK, the mega cap ETF. And in particular, I want to highlight a couple of lines in the sand. If the market does deteriorate, if MGK does pull in even further, this would be the line in the sand that I would say it really needs to hold. Again, right now it's trading higher, but when I see a rounded top like that, it is definitely something I'm going to watch out for. Then that next layer of support, easy for me to say, is about 5 to 6% away. My concern, again, is when I look at the technical indicators, I see some signs of weakness on all three of these indicators. We'll zero in on on-balance volume just to keep the chart or the conversation brief today. But what I'm looking at is this level here. OBV has fallen through that level, suggesting it is a little bit susceptible to falling further. The next thing that I want to take a look at is the number of stocks that are advancing minus the stocks that are declining. I'm going to look at that as far as an advanced decline line. But first, I'm going to show you the individual measures. On the left-hand side of the chart, I've got SPX, or the S&P 500, and on the right is IWV. The green bars represent advancing stocks and the red bars represent declining stocks. So last week in the S&P 500, we did technically have more advancing stocks than we did declining stocks. However, look at IWV. IWV, that is not the case. Last 2 weeks in particular, 2 weeks ago, you had barely any stocks that are advancing. And then last week, you did have a bit more, but the decliners were definitely greater in number. So you take that same data and you draw a line with it, and you can see that S&P 500 did make new highs in that advanced decline line earlier this year, but that has not yet happened in the Russell 3000. So this is one of our concerns. Said differently, right here, only about 37% of the United States stock market is above the 200-day moving average. So that's telling us that the vast majority of stocks are still technically in a downtrend. And when we look at the NASDAQ, we see something even worse. Only 31% of that tech-heavy NASDAQ are trading above their 200-day moving average. So in summary, we do see signs of strength. The fact that the market is trading higher despite the fact that the U.S. bombed Iran over the weekend, it's certainly a sign of stock market strength. However, we do see some underlying weakness underneath the surface, so we will remain on guard. Ultimately, as always, we're going to follow the evidence and we're going to follow our investment management rules. If you have investment rules, follow them. If you don't, feel free to reach out and let us know if we can help.